Were you ever caught off guard against the important trade decision or any other news releases?
Not that I can think of, because I think I learned that lesson relatively early, indirectly, because when I was new, when the Swiss National Bank abandoned the peg with the euro, of course that was absolute chaos, and that really burned into my mind, like, do not get caught out like this.
Hello and welcome to another episode of Trading Talks. I'm Stanislav Bernakhov, Senior Trading Content Specialist in Exness, and today we got special guest Michael Stark, Financial Content Leader.
Hi, Stan.
Yeah, today we're gonna talk about economic news. Should we ignore it or should we focus on that? And this topic is really interesting and I think important. So what do you think, Michael, about that? So do you use economic news now, and what was your approach earlier?
Yeah, I always use it. I mean, I always have used it in that I would say I kind of have to some degree of a bias towards fundamental analysis in the kind of general simple sense that we mean for trading CFDs. I don't mean detailed fundamental analysis over technical analysis to some degree. So I mean, that's pretty much always been my approach. I mean, it was shaped by the formative event when I was a very new trader, was in early 2015 when the Swiss National Bank dropped its peg with the euro. And of course, you remember that?
Yes,
it was absolute chaos, carnage. So that really burned into my brain as when I was a new trader, like, you do not want to be in the market when you see this kind of thing happening, you know? That was an extreme event, but it taught me, I think, a reliable one.
You was in position back then.
Oh, no. I just was seeing the reaction, like, you know, he was all sorts of people, like, there was one particular guy and he'd had like something like about 150 standard lots open for franc against all different currencies. And he was taking to all these different forums and saying, like, I've lost everything. I've lost all my money here. Like, what can I do now? And I mean, most people were kind of sympathetic, but also some people were coming in and saying, like, why have you got this exposure, like, around that? Yeah.
So I used to forget about economic publications in the past, for example, and like you had a bias to fundamental analysis. And so basically, how does it look like? So you sit in front of you just find a setup, and all of a sudden you see the move, out of the blue. And you say, oh my God, what's happening? Where is this volatility coming from? And then you see that it was actually scheduled in the economic calendar. So you could have prepared, so that was not sudden, that was not somebody saying something, that was actually scheduled. So you could have just, make your homework in the beginning of the week. So I think NFP, CPI, interest rate decisions, so it's all in the calendar. And did you have any story or maybe situation when you mislooked the calendar or maybe forgot about that and it affected your trading somehow, or maybe it brought you gains on that handle?
Not that I can think of offhand, in that usually when I see there's some kind of major event coming up, primarily from the USA, but also from Britain, because I'm usually trading the pound fairly often as well, then I'm just aware that this event is coming up. And in pretty much all cases, I try not to be trading over the release of these data, whatever it is. I try to see what the result is and then trade afterwards. So no, I mean, not that I can think of. I don't think that has actually ever happened to me that I can think of. Surprising news that's not on the economic calendar, yes, I mean, that's a different story, yeah.
So I think, for example, as of today, 2026, we have a different risk. Unscheduled news, let's say, because we have a president, US President Donald Trump. He likes to make some announcements on weekends, right? So many people, they hold positions overnight, over weekend, and especially if you do so markets can gap substantially after that. The latest example, I think it was the tariffs for European countries, for NATO members with Greenland, when he actually announced the tariffs and gold made a gap. Well, that's very unlikely for gold to make such a gap. That's a rare situation. The same was with natural gas. I think it gapped from to a 10%-ish, something like that. So imagine that the price goes above your stop and brings you 5-6 times more than your stop loss. Well, that might be frustrating. So I think nowadays we need to monitor such risks too, not just the calendar, right?
Yeah, absolutely. But I don't think that's necessarily a new thing. In that, I mean, one of the times where this would be probably the most memorable time for me is, I think it was probably in 2018 during Donald Trump's first term as American president. And he was saying something like, the Fed, the rates are too high. The Fed needs to like cut the rates to 0% or something like that. It's the usual like kind of nonsense. But at the time, it was only about 2 years into his first presidency, or actually less than that. And people weren't really used to this yet. And I, for some reason, I mean, I think there was a reasonably good technical reason for it, was selling silver, right? And so silver reacted quite strongly and moved up as a result of this. I remember being at the supermarket and opening MT5 on my phone and was like, hey, what?
You got stopped.
Yeah. And this kind of like frustration, like, what? And then, of course, later I went home, bought the stuff and went home and then checked the news like online. And I saw, right, Donald Trump has made these nonsense remarks about rates to the Fed. Okay. And I mean, the lesson for that really for me is not necessarily to be prepared. It's just like when I'm out like doing something or, not focused on trading particularly, then just don't check it on the phone. So if this surprising news happens and I get a certain position, hits the stop, it happens. It's okay.
Yeah.
It should not happen all the time, but I mean, sometimes these things happen.
Stop should be there because, that's another reminder that you need to have a stop loss because you need to be protected against such tail events. So other than NFP, CPI, rate decisions and things like that, what do you think we should monitor to avoid, being trapped in the news feed?
I think GDP is an important one, and industrial data in some specific circumstances. It depends. It depends on the context, depends on what markets are looking at. Because I remember when we were working on the quarterly outlook, it was called at the time, during COVID, and you were highlighting about PMI, and often PMI can be one of the early signs of rising inflation. And it's like, okay, you can say right now, if the Fed is doing this massive quantitative easing and it's like cut the rates to like zero negative, well, obviously there's going to be inflation. But at the time, it wasn't that obvious. Hindsight is 2020. And so when you were writing about this, and I was like looking through it, I was like, okay, let's do a little bit more research about this. So I started to kind of understand more about the influence of PMI on inflation in the future. So that's, I definitely think something is overlooked a lot of the time, but I think it is something that's important to watch.
Yeah.
And I think also, the last point on this, it's very important, if you have the time and the willingness, to read the minutes from the Fed and from other central banks meetings as well, because that can give you, if you kind of read between the lines in that can give you a lot of, I think, extra context for what to expect in press conferences and so on in the future,
Yeah, so if you want to dig even deeper, you might read the website of Federal Reserve to monitor the big purchases of the Fed, which is done by the New York board of the Fed. So it makes open market operations. Sometimes they make big purchases, big buyouts of T-bills and something like that. Well, institutional players, they definitely pay attention to that, and sometimes it affects the market. So that's quantitative easing kind of thing. So you want to maybe monitor that. But if you have the time and the willingness, many traders are just technical. All right. Thank you, Michael, for the interesting conversation. So see you in the next episodes. Well, thank you for coming.
Thank you, Stan, for having me. Thanks for talking.